Good afternoon. Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Rashi Garg. She is the Product Manager of Fair Value Pricing over IHS Markit. Welcome to the Nasdaq MarketSite.
Thank you, Jill.
What is fair value pricing?
Sure. Fair value pricing is pricing of foreign assets post-closure of their native markets. As markets globally are intercorrelated, any news in one part of the world impacts markets globally. Fair value prices capture any change in valuations of these foreign fixed income and equity assets due to any news or events in the open markets. Using these prices, portfolio managers and asset managers can accurately estimate the net asset value of their funds, especially those with international exposure, making sure that subscriptions and redemptions are taking place at appropriate levels, ensuring that we are keeping all the short-term stakeholders at bay from exploiting any arbitrage opportunities due to the intermarket correlation, and always ensuring that the passive long-term stakeholders are not impacted negatively.
Well, you had touched on why firms use fair value pricing. Can you give us a scenario and where using fair value pricing helped?
Definitely. So the use of fair value pricing is prevalent predominantly in the United States, and the key driver for this practice is SEC's 1940 Company Act, which requires mutual funds to use fair value prices for any securities that prices are not readily available for during valuations. So if any fund has exposure to an international asset that is not trading at the time of valuation, will not have a readily available price at that time, and hence the need for fair value. Having said that, the need for fair value becomes very pronounced during significant market events, for example, a closure of a stock market exchange, as in the case of a financial crisis like the Athens Stock Exchange closing for 5 weeks a couple of years back, or say a natural disaster as a earthquake in Japan leading to the Fukushima nuclear disaster. A great example is the most recent Turkish stock exchange closure for an entire week for the Eid festival. Due to the significant downfall in the Turkish lira, there were portfolio managers all across the globe actively looking for prices for these Turkish securities during the halts. So these are just some examples where the need becomes very evident.
Are you seeing growing interest in fair value pricing ex-US?
Yeah, definitely. It's exactly like every other regulation, as you would see in liquidity or MiFID II, where the regulation is local, but the impact is global. So as the uncertainty and volatility in the markets have been increasing over the last couple of years due to some major market events like the Brexit, the surprising results of the US elections, as well as the most recent trade tensions between US and China, we are seeing portfolio managers in EMEA and APAC also migrating towards the use of fair value while doing valuations, to make sure that they're capturing any market volatility, more of a best practice approach. Another interesting thing that we're seeing is the growing use case of fair value beyond the regulatory needs, as I mentioned, moving on towards hedge funds. So hedge funds sometimes have securities that don't trade for some period of time. Either they're suspended or halted, and so they do not have readily available prices on a daily basis. That's when we're seeing hedge funds reaching out to us for fair value for such assets.
So what's IHS Markit's role with fair value?
So we've been in this space since 2012. We're an independent fair value price provider for more than 150,000 corporate and sovereign bonds and equities. We provide fair value prices on an hourly basis round the clock. To touch upon briefly the approach that we use a statistical approach to do this, and we employ more than 70 plus global factors like your global index futures, the S&Ps, the Nikkei, the DAX futures, your sector ETFs, regional ETFs, FX rates, and more than 3,000 plus entity-specific factors like your CDS prices, depository receipts, ping sheets to best accurately estimate out of trading our prices for these foreign assets. Our clients include mutual funds, asset managers, fund administrators, auditors, and hedge funds all across the globe. Lastly, IHS Markit being the data warehouse that we are, we have exposure to a large set of data, which puts us in a unique position and powers us with capability to accurately estimate fair value prices for these assets round the clock.
It's like, what doesn't IHS Markit cover, right?
Right.
Thank you very much for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.